Retail sales come in a little lighter than anticipated, up 0.6%. They were down 0.8 last month. The expectation was for an 0.8 increase this month. Complete payback did not get that. Ex-autos, 0.3. Autos did rebound in the month of February. A lot of what happened to retail sales in January was weather-related, economists say. So we may be seeing some rebound pickup here. Retail sales control group is flat after declining in January. That's not as good of news as people had expected. The thought was we'd get a 0.4 rise for the month. PPI comes in, the headline, up 0.6. That's double what it was last month, double what was expected, and that is not going to be good news for the Federal Reserve's idea that they want continued good news on inflation. The core rate, if you subtract food, energy, and trade, kind of the super core, up 0.4 after a 0.6 rise the prior month. Year over year, the PCE goes from a 0.9 increase to a 1.6% increase, a fairly large move. The core doesn't move, however, it stays, well, the super core I gave you, 2.8 from 2.6. The regular core with just food and energy taken out, 2% from 2%. So anyway, we've got some issues there. But if you want to have something good to look at, take a look at jobless claims. They fall to 209,000. Last week's 217,000 revised to 210, and continuing claims fall a lot from the initial report last week, but the initial report last week was overstated. We're at 1,811,000. Last week's 1,906,000 revised down to 1,794,000. So the narrative that it's getting harder to find a job seems to have gone away, along with the narrative that inflation is going to get to 2% very quickly.
We started the week looking out to next week in the Federal Reserve, and I think most people we spoke to, when we asked them about the summary of economic projections, are they going to change from December? The answer was no. Got a little bit more information now. Is there a chance they change next week from December?
Well, there's a chance that we heard some of them talking in between the meetings about the possibility that they might not cut rates this year. Raphael Bostic, for example, Neil Kashkari talked about that. So it is possible they could move their dots. We're assuming their dots were in the 2-cut range before. So if they look at this data and think this is going to persist, then you're going to have to take it apart to really know whether it is going to persist. The portfolio management thing that we care about for the PCE looks like it was up just 0.2% after 5.9% in January. So it wasn't the stock market's fault this time. Insurance, health and medical insurance, though, up 1.4% after falling 1.1%. Now, this is probably a catch-up to the turn of the year and when insurance companies raise their rates. So we're probably seeing a little bit there. But those two areas are things that are going to be something the Fed is watching.
To put a bow on all of this, what we're seeing in initial jobless claims and continuing claims, people can get a job and they're not getting laid off in a way where they've got to file for claims, right? It doesn't seem like that's a real issue. On the PPI side, can we say that the narrative there is we are now seeing goods reinflation in a way that a lot of people didn't want to see?
That's a good way to put it. You didn't say in a way that people didn't expect. It's been expected that we would see goods deflation sort of slow and end because trees don't grow to the sky or fall into the ground the same way. So at this point, it looks like maybe that's where we are. Now, in terms of jobs, what you would expect from jobs is that people spend money because they have employment. And really, it doesn't look all that bad here. While we saw just a 0.6 rise in retail sales overall, a lot of that was held down by gasoline stations. Gasoline prices were up only 0.9%. That wasn't what people had expected. Clothing store sales fell by 0.5%. Department store sales fell by 0.2%. But motor vehicles were up 1.6%. Electronics and appliance stores up 1.5%. So some categories did fine, some categories not so good. The food services and drinking places we always look at, they were up just 0.4%. So it does show that people are still going out, It's the only services number in the retail sales.
That's the TK indicator.
That's
as
the
you
TK
know.
indicator,
That's why
yes.